the key difference between a revolving credit and a offset loan? Well, think of it this way. A revolving credit is essentially one bank account. It's one transactional account, and you can have your income going into it. You can have savings in it for all sorts of different purposes. Like you might have savings in there for your wedding, and some more for the next car, and one for your next washing machine, and you can have it all within that one revolving credit. But this is where it gets confusing for a lot of people. It is just one account. So think about if you had one bank account right now and you're trying to do everything out of that bank account. It can get really confusing for a lot of people because the money for your next holiday and the money for your new car and all that, it's just all kind of mixed up together, and somehow you're meant to keep track of what's what. This is why when people use revolving credits, there is an extremely high failure rate, okay? I would probably say something like a 95% failure rate. There's probably only about 5% of the population that are organized enough to use it properly. And of that 5%, probably 2.5% aren't even doing it that well. Okay, and so if you're wanting to keep track of your money and your income and know where your funds are going, I would say very difficult to do this if you're the average Kiwi, and also it's not really in line with human behavior. Offset, on the other hand, you can have your a whole bunch of different bank accounts. I've got 3 in this example, but you can certainly have more than that depending on the bank. But you can have a whole lot of different bank accounts, and so this bank account could be for your holiday savings. This one could be saving for the next car that you want. This one could be saving for your haircut if you've got lots of hair. Whatever you want, you can have different bank accounts for different purposes. You can choose what the purpose of those bank accounts are, but you can now keep your funds separated in their own separate little pots, right, in their own separate bank accounts. And all the money in these 3 different bank accounts are offsetting against your mortgage and saving you interest. So that's really the main difference. So with a revolving credit option, you're still saving some interest, but it's just hard to keep track of your money. With the offset option, you're also saving interest, but it's easier to keep track of your money because you've got these different accounts that you can give labels to in internet banking, and we've found that this suits human behavior a lot better and easier for humans to follow where their money is going.